Welcome back, ladies and gentlemen, to EV Nickel's channel, accelerating the transition to clean energy with battery metal exploration. Forefronting the industry, we always have the Chief Executive Officer joining us here. The pleasure of Sean Sampson. Welcome back.
Hi there. Nice to be back.
Always a pleasure to have you, man. So this is going to be really intriguing. We kind of encapsulate a lot of EV nickel, but this year's really kicking off for you, man. EV nickel stock rebounding as you announce high-grade nickel intersections from your Langmore project we briefly discussed, and now you just moved into phase 2 drilling, which is taking off. Can you kind of just briefly discuss kind of this expansion and what's going on here moving forward?
Yeah. So last year, when we first took over the project in the May of last year, we reran all the geophysics to really understand the project and then understand this huge land package we have. So we have over 9,000 hectares, and we wanted to rerun the numbers using sort of modern technology to figure out how the project lit up and to identify new targets for exploration. Now, one of the 6 high priority targets that were reviewed by these experts in geophysics was the W4. That's where we drilled last summer. So that was the existing resource. And in phase 1, the drilling we did last summer, we confirmed that the deposit continues up and down trend and then goes deeper underground as well. So that was good news out of phase 1. Phase 2, which we announced earlier this month, is that we are rolling out to the other high priority targets. So we have 10,000 meters of drilling budgeted. We have a new drilling contractor, a local contractor from the Timmins area. It's First Nations owned and operated, the drilling contractor. And we're excited. The drill's out there now working hard. So we've got 10,000 meters planned. We're going to go after these other targets. So these are exciting, not explored before targets that are across our property. And we're going to be targeting the same sort of near surface, high grade mineralization, the sort of mineralization which we have at our existing starter resource, a W4, which is 1%. And that's the kind of grade that companies turn into mines. So that's what we're going to be looking for with these other targets. It's exciting because they haven't been looked at before. So we're going to be in there, and that's our news flow from exploration over the next 6 months, our phase 2 drilling, those 10,000 meters.
Yeah, it's going to be great to see these news results come out. I'm sure it's got a lot of the investors getting excited, especially with these commodity prices continuing to soar. Speaking on the financing side of this business, I know I wanted to dive down a little bit into the balance sheet side of it, but do you mind just discussing briefly kind of the cash spend for this program, what kind of runway you guys have coming into this year, and just some insights on there?
Yeah, roughly speaking, we pay $250 all in per meter of exploration drilling. So that includes our contractor, that includes the labs, an allocation for owner's cost. So that 10,000 meters is going to cost us about $2.5 million, which is a little over half of the cash we have in the bank right now. So on top of that phase 2 drilling, we have funds to be able to keep the company going for at least a year, 18 months. So we're cashed up, which is good news because of the recent stock performance, and it allows us to really concentrate on, executing on our objectives. So objective 1 is to find as much nickel as we can at Langmuir. And that's this phase 2 drilling program where we begin to understand more about the mineralization across the 9,000 hectares of Langmuir. So we're cashed up well. So we'll obviously, we're a junior, so we'll be back financing at some point in the future. But the good news now is we're able to concentrate on what's going on with the company and just execute and deliver on the things we said we were going to do.
Yeah, so this should be a great period of kind of unlocking the value of those assets and kind of, really getting that those interesting results to come out. Yeah, it should be really entertaining to see how this kind of unfolds. Do you mind just giving us some insights from kind of like the retail audience kind of questions? I know you got 30.36 million shares outstanding. Do you want to just break down that capital structure from like the institutionals, insiders versus that retail audience, just to see how this kind of stands?
Sure. So we have 30 million shares outstanding, as you mentioned. So we've got a pretty tight share structure. One of the largest shareholders of those 30, 6.6 million shares, is with Rogue Resources, the company from which EV Nickel purchased the Langmuir project, and that's the other company that I run. So we have Rogue Resources and then a group of founders who worked with Rogue to start the company. So Rogue's sitting on 6.6. The founders have about 10 million. Both of those groups are pretty locked up and the shares come out over 3 years. Then we have the shares that were for the private round the company did last March. And then of course the IPO in December. Both of those rounds had about 7 million shares each. So about 14 million shares, roughly speaking, is across those two groups. Half of both of those financings went to 4 institutional investors. And then in addition to those 4, we were high net worth and retail for both the March round and the December IPO. So in terms of institutions, we have in there Rogue, the vendor of the asset, and then we have these 4 Toronto-based investors, institutional investors, that took half of the 7 million shares or so that went out in the March round, and then 7 million shares that went out in the December round. So broadly speaking, there's 7 million with these 4 institutions, a little under 7 million with Rogue. Then the public investors that came in for the remainder of those 2 financing rounds. And then on top of that, we have the founders group who are tied up for 3 years. So it's a tight cap structure in terms of total shares outstanding, which I think when people are looking at juniors, it's always important, especially for retail investors, to be aware of sort of the size of the denominator. So we've got a tight shareholders list, and I can explain where all those shares are, and big chunks of that float are tied up out over 3 years. So we have it tight. And back to what we were talking about before, news this year, I would hope that we have sort of the ingredients all put together for the sort of thing to have the stock price move on news, right? So you want to have a small, tight structure, which is closely held. So then when people want to pile in based on news, it drives the share price. So that's really the strategy. And I think that's why we're a very compelling share price down here in the 30s for new investors to commit on the story.
I would agree. I mean, the strategic position you guys have put yourself in, I mean, to be cash rich in a position to get these drilling programs done, not in a period of dilution with over 50% between insiders and institution. I mean, I don't know what more you could ask for a formulation for a really intriguing story moving forward. So on that note, Sean, I definitely appreciate you coming out today. Thanks so much for these insights.
Great. Thank you. Look forward to speaking again.
You as well. And as always, guys, if you have any questions, always let us know what you think in that comment section below. Consider subscribing as that news comes down the wire. We will get it up here for you as soon as we can. And in light of this, stay cool, stay awesome, and I look forward to catching you in the next one.